Welcome to the PowerPoint demo for Chapter 4. In this chapter we start completing the accounting cycle. We've introduced you to a lot of accounting terminology, to journal entries, general ledger, and general journal. Now we're going to run you through a complete cycle and have you close the financial statements out and generate financial statements. Close the books and generate financial statements. We're going to talk about using a worksheet, and for most businesses with the way they're computerized today, they probably don't do a lot of worksheet activity, although I'm guessing that experienced accountants still find it a real useful tool. Then we'll look at the steps in closing books. We have to prepare and post the closing entries and do a cleanup trial balance to make sure that we got everything posted correctly. And then we'll look at reversing entries, which I always liked reversing entries and made life simpler for me. Correcting entries, which occasionally we all have to make. And then we're going to review some depth balance sheets. We're going to look at classified balance sheets. We're going to look at a worksheet. It's a multi-column piece of paper used to prepare financial statements. It's not a permanent accounting record, although most companies keep it for a long time. And it involves a 5-step process. Use of the worksheet's optional. Again, I think experienced accountants are probably still using it. Though with some of the computerized things, it may not be as critical as it was. This is a picture of the worksheet. The left-hand column is for account titles, and columns B and C on this spreadsheet are for trial balance, debit credit column. Then we've got 2 columns for adjustments, debit credit. Then we have an adjusted trial balance. And we have 2 columns for income statement and 2 columns for the balance sheet. The starting point is to look at your general ledger and list all of the accounts that have a balance in there. List them in account order. So in this case we have cash with a debit of $15,200, advertising expense with a debit of $2,500, and so on. Notice that those columns total up and the columns balance. If they don't balance, then we violated the 12th commandment that debit should equal credit. Our next step then is to make adjusting journal entries. And we go ahead and we analyze the existing account to see what's changed, what's been recorded that needs to be deferred, what hasn't been recorded that needs to be accrued, and make those adjustments. We're not going to post them at this point, however. We're going to make the adjustments and put them in the adjustment column of the worksheet. And then we add, as you can see on the left-hand side, we've added additional accounts. We added advertising, supply expense, insurance expense on the worksheet. We probably already have them in the general ledger, but they had 0 balances, so we didn't list them. Now we list them. We record our adjustments in the adjustment column, and we total the adjustment column. And again, debits equal credit, so the total of those 2 columns should equal each other. Then we compute our adjusted trial balance. You can see that on the second line here, advertising supplies on the trial balance had a debit of $2,500. In the adjustment column, we credited that account for $1,500, so it nets out to be $1,000 adjusted trial balance. So we do that for all of the accounts, and we come over, and if we haven't made any math mistakes or other mistakes, then our adjusted trial balance, the debits and credit columns will equal each other. In this case, it's $30,190. The next step is to extend, to take from the adjusted trial balance column all the income statement items and put them in the income statement column. So that cash, advertising, supplies, prepaid insurance, office equipment, those are balance sheet accounts, so they would not go on the income statement. Instead, we drop down to things like service revenue, salary expense, rent expense, advertising, and so on, and drop those in. Notice that the debit column here is 7740 and the credit column is 10,600. So those don't equal. We have a revenue of 10,600 and we have expenses of 7740. That means we have a net income. If our debit column there was larger than our credit, then we have a loss. But notice that those don't balance at this point. We're going to fix that in just a second. Next thing we do is to extend all the asset, liability, and owner's equity accounts to the balance sheet columns. So cash, advertising, prepaid insurance, so on get pushed over to the balance sheet columns. And we total the debit column and the credit column for the balance sheet. And again, those don't balance. And the reason they don't balance here, that difference is the income. It's it's the same difference between the income statement columns that we have in the balance sheet columns. Or at least it should be. So we compute our net income or loss. Here you can see that we had a income of $28,060. If it had been a loss, it would have been in the credit column on the income statement and the debit column on the balance sheet. So a quick review question here. Net income is shown on a worksheet in the income statement debit only column. We know that's not true. We know it had to show up in both income statement balance sheet. So A and B are wrong. C, the income statement credit column and the balance sheet debit column. We know that's not right because we just saw the picture where it showed up the other one. So the correct answer is D, the income statement debit column and the balance sheet credit column. You can keep that straight because the balance sheet credit column will increase owner's equity, which is what that income